Hi all, this is Ashish Kal here. Welcome to Elliott Wave News Channel by Wave Strategy Advisors. And we had a very interesting week where we saw Reliance Industries moving up by nearly 10%, sorry, nearly 12% in a single day, which is probably not a very often scenario. I think it was in 2009 when Reliance showed a very sharp up move, but that was again because of the upper circuit that the index closed post the elections. And it is after 2008, I think Reliance has been consolidating for so many years between a range, and it is after many long, I think 8 years that Reliance Industries has managed to cross that resistance level and has managed to move towards the territory of around 1200. So it's now going to be crucial to see how the monthly close comes out to be, which is going to be next week. And on the weekly closing basis, the Reliance has managed to decisively close above that resistance zone. And on the monthly basis, it's going to be important if that close is maintained and sustained there. Now, I'll share across the chart of Reliance as well. And a very interesting observation is that over past few years, Reliance has failed to move the market in any direction. To be very honest, this stock has been a very heavy weight on the index, and yesterday's movement was clearly driven by Reliance Industries alone. However, even then, the overall index or Nifty just closed flat or with few points positive. So it's very surprising to see that this heavyweight stock actually does not move index at all from the net perspective. On an individual basis, yes, it contributed towards around 200 points on Sensex on the upside. But what happens whenever Reliance Industries start moving, the majority of the market start consolidating or moving in the opposite direction, thereby balancing the entire index to the level which is probably in a range or in sideways action. And similar thing happened yesterday. Reliance was contributing strongly to the up move, but there were other stocks that were declining, which managed the index and Nifty around 5 points or 10 points plus. That's it. So what is important is even if Reliance Industry is about to start a new trend or a very strong trend on the upside, it does not convey much about what is going to happen with the index. And it's important to look at the index on an individual basis using the individual Elliott wave patterns as well. And the 2003 to 2008 scenario was very different, where Reliance was one of the major reasons why the index continued to rise exponentially, and the buying was witnessed across the stocks. So this time it is very different. There are not all stocks are participating on the upside. Very few limited sectors are participating. Few stocks are participating. So it has been a very typical rally, and making money in such kind of an up move or uptrend is not very easy. What happens for an investor or a trader who is not who is probably just a beginner will probably look at the overall index and see Nifty somewhere around 8 900 9,000 mark, and will try to and will get anxious that the rally has been very strong and upside. But trust me, during this rally it has been only few stocks that have participated, not all stocks participated, and it has been on a rotational basis. So if you are an option trader or a derivative trader, not necessarily you would have made money because options value have been deteriorated. And especially, for example, there was a huge event just few days back when HDFC Bank rallied sharply on the upside, and most of the banks were following. But suddenly, then the euphoria vanished, and the bank started moving lower. Bank Nifty is on the verge of crossing above its high made few days back again. But so that is the reason why this rally has been very typical and peculiar, I would say. Let me now share across the chart of both Reliance and Nifty. So first, let us look at Reliance from a bigger perspective of what is the pattern that has been ongoing all the while. This is the Financial Wave short-term update equity research report, which we publish before the market opens every day morning. So we published this research report in today's morning, and let me just share across Reliance chart first, because that has been all over the news. So this is an excellent example of how the stock had been underperforming for so many years. If you look at this chart of Reliance, it made wave A at the low in 2009, It continued in wave B. It touched the level of 1270 odd levels on the upside, and then continued to consolidate, move down towards the level of 620, 630. Again came upside towards the level of 1160, from where it has been moving in a very range bound action before finally giving a breakout on the upside. Now this break on the upside is just a single day affair as of now. So what we are yet to see is the monthly close. The weekly close is definitely positive. We are yet to see a monthly close, and a follow-up buying above this level of near around 1270 is going to be further confirming that a very long trend of 8 years is probably ending. And if that is the case, then we are indeed going to start wave 5 on upside in Reliance Industries. So that's a promising sign. So any investor who wants to build on to the position can do that. Keep a very strict stop loss near the levels of around 1100, because if Reliance breaks again back into the resistance zone and that support gets broken and comes down again, then there is a possibility it was just a false move. Looking at the overall chart, the chances are less because the volumes have been very strong. At the same time, I do not think that this up move is just based on what happened with the announcement Mr. Ambani made yesterday with respect to Jio, because the announcement was made yesterday. There was sufficient time for Reliance Industries to move after that, but it did not. I mean, it was just consolidating 2 days back, sorry, and then suddenly yesterday it then moved very sharply from the beginning of the day itself. So when 2 days back the announcement was made, it did not do anything, and yesterday there was a sharp up move from the start of the day. So there is a possibility market is probably discounting something else which might be coming up in near future. Not necessarily a telecom play, but there is something which might be with the oil and gas refining business or something else which is getting discounted as of now. So that from the fundamental side. But yes, it's just a speculation. We are not sure what's the actual news is going to be. Next few days or weeks are going to make us more confident about what's cooking up. For now, looking at the structure, it has been a very strong up move, and there has been a good volume as well. So the breakout looks genuine for now. Now, what is there for Nifty? I would, as I said, breakout on Reliance does not necessarily calls for a strong move on the Nifty as well, because Nifty and Reliance has been not much correlated over past 8 years, I would say. Now let us look at the chart of Nifty, what is happening over the medium term to long term perspective. The entire movement since 2009 has been in the form of a triangular pattern, and prices are lying just around this area. It managed to cross above 8970 today, but again reverse back. So there is some nervousness which is creeping in around this zone. So this zone becomes extremely important, and we need to see a very strong breakout above this zone, followed by 9119, which is all-time high, which will further confirm that there is a possibility wave E got completed at the lower end and the next trend on the upside has started. It's a very important juncture that we are right now. So completion of wave E near the low and the start of the new uptrend, I cannot rule out that completely. But what we are going to also observe is how the mid cap and the small cap space performs. Remember 2 days back when Reliance, yesterday when Reliance was performing, mid cap, small cap showed some serious sell off, and there were only 500 advancing against 1500 declines. So we are going to see how the markets, overall broader markets, are going to perform if Nifty manages to cross and close above 9,000 mark, followed by 9119. So we are at a very important juncture. In case we see a strong momentum above 9119, then yes, there are much more higher levels that can be expected. In case the lower levels starts breaking and the support levels break, these supports will be mentioned in our daily research report. So if Nifty starts breaking those support levels, it is only then we will get a confirmation that there is some nervousness creeping in. Until that, the best strategy to follow in the market is to follow a bar technique, which is as long as we do not see a close below previous bar, stay with the trend. That is one of the most simplest technique. The other is following a moving average trend, because in such kind of a market where there is no strong pickup in momentum, and but price still keeps on moving higher slowly and steadily, the best strategy is to look at the market just near the closing time, see where it is closing. If it is managing to protect the prior day's low on closing basis, fair enough. If it is not, then probably change the strategy a bit. For now, we are at a very important juncture. Stay tuned. We will be keeping on updating in our daily research report about where is Nifty headed. We have also published the scenario analysis of Bank Nifty in today's morning report. You can get access to it from our website wavestrategy.com. Look at the website and you will get a lot of strategies from there as well. What we are also planning to do is we will be having a Q&A session in next webinar based on a lot of demand that we got from our subscribers and viewers. So it's going to be a Q&A session. If you have any questions, please send across your questions directly on our mail ID helpdesk@wavestrategy.com. I'll try to address each and every question that I receive, but I cannot promise because there might be a lot of questions I might get. And or else you can also post it on our website under the discussion forum, where you can just post the questions and we will take it from there. Or you can also post it from the contact us page on our website. So we'll take it from there. So any questions, send it across. I'll try to cover those questions in the next webinar. We have already received a few questions like difference between the small X wave and the big X wave as per neo wave concept. We have also received a few other questions with respect to technical analysis. So we'll cover those as well. If there are any questions, I would appreciate if those are more generic questions rather than stock specific, because the time will be short and it will not be possible for me to cover all of them. So I'll be trying to cover the questions as and when we receive it, we'll collate it, and I'll talk about those things. So stay tuned. An interesting week is lying ahead of us, and we are going to see if Nifty is indeed going to cross above these important barriers and headed for the new highs or not. And the broader market participation is definitely going to be important from here on. And just an announcement again. 18th and 19th of March, we are conducting a training on Neo Wave, Elliott Wave time cycles, understanding square of 9 cycle using GAN analysis to some extent. So those topics will be covered in 18th and 19th of March training here in Mumbai. So anyone who wants to enroll, please do that, because we have limited seats. In case you are having any doubts or queries, feel free to write to us at helpdesk@wavestrategy.com. And we will take it from there. Thank you for now. Have a wonderful weekend, and wish you all a very happy Mahashivratri. Thank you.